special edition of Davos 2012, and I have with me Arif Naqvi, the founder and Group Chief Executive of Abraaj Capital. Abraaj is the largest private equity firm in the emerging markets. It manages over $6 billion in equity assets, predominantly in the Middle East, Africa, Turkey, and large parts of Asia. Mr. Naqvi, thank you very much for your time.
Nice to be here, thank you.
I have to ask, in this troubled world, as we see around us, you're in probably some of the hottest growth spots, and that's what you think will tide you over for the next several years as Europe and other parts of the developed world struggle to regain momentum?
See, we've known this reality for a long time. It's nice that the world has finally caught up to know it as well.
Right.
The emerging markets today are really the growth story that the rest of the world has picked up on as well. And for so many years, people were obsessed with, yes, there's the OECD, and then there's BRIC, but there's so much more to emerging markets than just BRIC. And as far as we're concerned, the total combined population of emerging markets, the middle class population, is going to exceed 1.2 billion people in a few years' time. That's more than the entire population of the OECD. And all of these people are young, they're affluent, they're hungry, they want more consumer products, they've seen the MTVs of the world, they want more, they want it for themselves. And businesses like ours are really there to understand that market need and to provide that service.
Do you see that consumption being hurt to any large degree because of the trouble in the developed markets?
I think we can't ignore it. We don't live in an oasis or an island by ourselves. And you can't pretend that what's happening in the rest of the world is not going to affect emerging markets, because a large chunk of the revenue that comes into emerging markets comes from exports to the OECD countries. So of course we're affected. But the important thing is to realize that these methods by which we're being affected can be isolated, we can insulate our economies from them. We can begin to trade more with each other, more South-South trade than into the OECD. There are many different ways of being able to look at ourselves in a non-protectionist and yet insulated manner.
This forum is interesting also because it marks 1 year to the beginning of the Arab Spring and the end of the last World Economic Forum annual meeting in Davos. I know that the protests in Tahrir Square were just breaking out. It has been a landmark here for the region. What do you make of the kind of lasting impact it's had and the struggle as several countries and their people move towards a more democratic form of government?
Sure. I mean, look, it's been a momentous year.
Yes.
But if you and I had been talking about the same possibilities 1 year ago, we'd have been talking about the uncertainty of what if.
Yes.
What if Mubarak goes? What if Yemen no longer has Abdullah Saleh? And so on and so forth. What we've done is we've taken the uncertainty out of the future into the present. So we're living a world of uncertainty today. I don't think it's over yet, and I don't think that the forces that shape the responses to what is happening have yet found their feet. So, for example, in Egypt, we've had a process towards an elected transitional government. We should encourage it.
Yes.
It's happened. We should move on. The same thing should happen in different countries that are finding their own self-expression. But with uncertainty comes a large price, because, you know, in financial markets, you can price risk, right? You can measure it, you can price it. You can never price uncertainty. Uncertainty is that big nebulous outcome that we don't know where it's going to go to. The second part is people are still not awake to the fact that we're actually living through a societal change.
Yes.
It's not just about the young in Tahrir Square who rebelled, or the young in Tunisia, or the young in Yemen. I think it's a global young problem, because we have, all over the world, we have a phenomenon that people are not waking up to, which is called graduate unemployment. You have the same problem in India, you have the same problem in the Middle East, you have the same problem in Europe. Okay.
And in the US.
And in the US. So graduate unemployment is a critical issue, because guess what? We brought up all of these kids to say, your world will be a better place than ours. And having sent them to university, they're unemployed, but they know more about their world than we do. So this sense of community they've created, and using new technologies, enabling them to actually defeat hierarchy in a manner which is far more commendable than, you know, taking up arms and fighting. So the world is going through a transition. It's an interesting period, and I think they know more about their communities than their leaders know about them.
Sure.
Okay, so I think that this is just the beginning. I think it's going to happen in other places, and I think until we address the issues that have led to it, like unemployment, like lack of vocational training, like the fact that public markets today are being affected and moved by policy, not by fundamental analysis.
Absolutely.
Right?
Yeah.
And so then how can you rely on public markets to feed the capital needs of companies? Because companies are being penalized through actions of governments and often in very faraway places.
Okay, in this context, I do want to ask you where you see and how you see investment opportunities work out. But before that, I'll persist with the theme of the changes in the Middle Eastern and North African region. And I want you to give us a sense of, I know these are long drawn-out changes. Nothing is going to change in 2 months, 6 months, or a year.
Yeah.
We're seeing progress, and it's slow, as always.
Correct.
But how confident are you that this is going to be peaceful progress?
I think we can all live in hope, okay? I think it all depends on reaction. Okay. Now we are watching, for example, in the countries that have already tumbled, we have seen systems that were in place for 30 and 40 years.
Yeah.
Okay. We have Syria, which is still in a state of confusion, and we have Yemen, which is kind of finding its muddled way out. But the real reality that we have to face right now is all of these regimes that fell had vested interests that supported them, whether it was the army, whether it was the bureaucracy, etc., etc. How they cope with this change is of equal importance to how people vote. Okay, and that's the big intangible that we have yet not seen the outcome of.
What is your view on what the Egypt elections
I think it's going to be fine.
It is going to be fine?
I think that, the people have voted, and I think if we believe in democracy, we should accept that outcome, and we should understand that we need to give everyone a chance.
Okay, that's a fair take. Let me go back to the main theme of this conversation, and that is investment opportunities. You spoke about a world going through a societal change. Clearly, that will throw up several investment opportunities. And I don't mean to look at this from a commercial or mercenary point of view, but you've got to put money to work.
Sure.
Where are you putting your money to work?
I think all of these markets, across emerging markets, continue to exhibit a lot of opportunity. And the reason is, like I told you, there are so many new people that are coming into the workforce, and we have the societal problems of unemployment, but we also have a working class population that is becoming more affluent. And so we look to see economies that have reasonable stability in them. We look to see where they're underserved. So if you think about the kind of investments that need to be done, and go back to business school jargon, right? When we used to think about infrastructure, we think of roads, bridges, and highways. In our countries, infrastructure is anything that moves us to the next stage of development, and that must include things like healthcare, education, logistics, and so on. So the quantum of investment flows into these markets is humongous, and the opportunity is extremely large. So when I look at whether I want to invest in Nigeria or in India or in Indonesia or in the Middle East, because those are our markets, I see opportunity simply driven by the fact that these are markets waiting to grow up.
Is your money, let's say, equally divided amongst these markets? Is there an area, geography, space that you prefer more and see more prospects
well, like
for
all
growth
good,
right now?
Like all good fund managers, we're very diversified in our exposure and
so you're not going to tell me if there are any specific areas or spaces that you prefer at this point in time, at least over the next 2 or 3 years? It would broadly include the area of infrastructure, as you pointed out.
We're very sector agnostic. So we tend to focus on businesses where we can make a difference.
Right.
We like businesses that generate employment. We like businesses that have skill sets that are unique to the market that we operate in. And we are in a part of the world now where, quite frankly, the future is ours. China registers more patents than the US and Japan combined now. And who would have thought that a few years ago?
But you come also from a region that is flush with cash, in contrast with lots of parts of the world. So I'm not going to ask you whether it's difficult to raise money, but I do want to know how you see the global liquidity situation pan out over the next several years, because we seem to be in a cheap money policy, and where you think that money will be looking for growth.
But first of all, when you say that there's excess liquidity, I have to tell you, whenever you're raising money, it's not that easy, because performance is the only criteria that dictates whether you raise money or not. I think yes, there is a large appetite amongst sensible and professional investors to continue to look for opportunities in private equity, in the private markets. I think the biggest opportunity in our markets today is in the SME space, because that's where you generate the most employment, that's where you see the greatest value add. And as a firm, and I hate talking about my own business, but as a firm, we generally take a more stakeholder approach than a shareholder approach. We like to make money, like everybody does, but we like to be able to make a difference as well. So we're very driven by being involved in the communities in which we operate, by making sure we're good corporate citizens, by making sure that we have our governance models in a way where the companies we buy go up the curve of becoming nicer companies, and for us to have an impact on society.
I know that you have interest in India as well, and
Yes.
I want you to talk to me about what you think about the prospects for growth in India.
Well, I don't think we have enough investments in India. We'd like to have more investments
Sure.
in India. We think India is a fabulous growth economy. There are always structural issues in any economy that is emerging. I think India, frankly, it's a misnomer to call it an emerging market. India is an emerged market. India has a lot of maturity in a lot of ways, but then you also have a lot of issues around the reform of your tax laws, around the system of governance and so on. And I think once you've addressed that, then the quantum of investment flows into India, both domestically generated and interest from outside, is going to be spectacular.
What are your colleagues in the global private equity world telling you about how much cash they're going to be able to put to work this year? Or are they going to hold on till they have a clearer picture of what's going on
I
in
think
Europe?
in the West they are tending to hold on because there's a lot of confusion in Europe. I think that the European sovereign crisis is actually not a sovereign crisis as much as a crisis of leadership. I think if Europe stepped up to the plate and did the things that it had to do, then we'd be out of this, let me call it morass, and we'd be moving on to more productive uses of time and money.
All right, Mr. Naqvi, thank you so much for joining us, and thank you for your time.
It was good to be here. Thank you very much.
Thank you.
Thank you.